other different types of accounts. We have other asset accounts, other liability accounts, and fixed asset accounts. Let's look at the chart of accounts in QuickBooks. From the home screen, you can click on Chart of Accounts and then the Company section. We talked briefly about employee advances, which is an other current asset. Again, anything that's other current is under 12 months. We have talked about security deposits for your vendor deposits, I should say, and your customer deposits as liabilities. Now we're going to add a couple other ones. Security deposits can be a security deposit for rent. It can also be security deposit for utilities. I actually like to see those broken down, although in the sample file, there's just one security deposit of $1,200. That's most likely going to be, it looks like it's an opening balance, but it was most likely a prepaid rent. We want to create another prepaid, and you can have just a global prepaid, which is what we're going to do. We'll create other current asset. Remember, that's under the other account types. Click on Continue, and I think 1,500 might be available. Let's call this prepaid assets. And under the prepaid assets, I like to have that as the main category, and then maybe move some underneath. So I have prepaid assets, I have prepaid security deposit. I'm going to click and drag that in. Of course, I'd probably want to edit this. Let me edit that to match 1,300. A little tricky when it comes to that. Okay, 1,300. And I want to keep all of my assets very similar lines of numbers. Let's do one more. Let's create a prepaid insurance. Now with prepaid insurance, most of the times companies do have prepaid insurance of some kind. They could have prepaid health insurance, because health insurance is typically paid a month in advance. You can have prepaid workers' compensation, or even a general liability policy. Unless you're doing pay-as-you-go workers' comp, for example, most workers' comp companies require you to have a 20 to 25% down payment, and then the remainder of the 10, or the total of 10 payments, the remainder 9 payments are the balance broken up into the 9 months. So usually you have a 2 months that's a little bit of no charge or free. Not really free, but at least there's no charge for those additional 2 months. So we want to type in prepaid insurance. We'll make that a sub-account of the prepaid assets. So now we have our prepaid insurance, we have a security deposits, that's a prepaid asset. You could also, maybe you have a prepaid rent. You could have a prepaid rent. I know I have a customer recently that she told me that they had to pay, since they were a new business, they had to pay a year up front of rent, which was a lot. But that would be something that you put in the other asset, and then you choose to expense it. Let's take this prepaid insurance as an example. Let's say we had to pay a full year of insurance up front, and then we want to accrue it, meaning that we want to spread it out over the next 12 months. We can go into company, create a company check. Let's say that it was for the Hartford. This is a different file, Hartford. We'll add that. We'll add them as a vendor. Let's just say it was a $1,200 payment. I like to keep even round numbers. This is going to be a prepaid insurance. So we're going to choose the prepaid insurance account and record that. Now we've expensed the money, so the money has gone out, and now we have a prepaid insurance of $1,200. I can open that register, and I can see that $1,200 payment in here. Now what we want to do, it uses a combination of what we just learned in memorized transactions. With the memorized transaction, since this has already been paid, we don't have to worry about it being an advanced transaction. It just has to be a transaction that will decrease this every single month. If you're not an accountant, the easiest way to go in and create a memorized transaction that behind the scenes really is like a journal entry is to actually come into this register. In this case, we're in the prepaid insurance. We're going to decrease this $1,200 on a monthly basis for a year, so then the incremental fee is going, the incremental charge is going to be $100. Then we're going to tab down to the account that we're going to expense it to, and perhaps this is our workers' comp. Let's do general liability. Perhaps this is our general liability policy. Now, I'm going to set it to memorize. $100 a month is going to go in expense against our insurance liability. I can right-click. I can memorize this journal entry and call this general liability. I could automate this entry on a monthly basis. Since I've already done the first one for this year, I want to change it to where the second one's going to come out on the 15th of the following month. The number remaining, if I save this first transaction here, there's going to be 11 remaining. Since I don't have to remember to pay it since it has already been paid, my days in advance is going to be 0. I can click on OK, and now that I've memorized it, I can also record this transaction. Now my balance is $1,100, and I have a memorized transaction for general liability that's going to come out the following month. So now I don't have to remember this until next year when I pay my insurance in advance again, and then have to pay it again, set this payment up to automatically journal entry that on a monthly basis. The next thing that we're going to discuss is the fixed assets. Going back into the chart of accounts, you'll see a couple fixed assets in here already. We have automobiles and trucks, computer and office equipment, machinery equipment, and there's accumulated depreciation. I usually like to have all of my assets fall under a primary asset account. Let me see what they start with. So I'm going to create one called 1500. And this is under the main types of accounts. And this is 1500. We're going to call this fixed assets. And then click on OK. It's just something that I prefer. You don't have to have that. I like to move all of my fixed assets with the exception of my accumulated depreciation out. You could include your accumulated depreciation, but what I like to see on my balance sheet is that fixed assets clearly separates the total of my assets less the depreciation. I like to see that clear on my balance sheet. When you buy an equipment, let's say a computer, we want to go into the chart of account, or excuse me, into the check register. So let's go and write a check. I think there was an office supply. Yeah, there's Office Mart. Let's say the computer was $758. What we want to do when we're buying a piece of equipment is actually go to the Items tab. We want to take care of two things at once. We want to first of all record that I'm buying this computer, and I also want to record the fixed asset. This will help your accountant at the end of the year. You'll be able to provide this nice fixed asset list for them, and then they'll be able to properly prepare your taxes. When we go into this, when we have this item, you can either start typing it, like we can say computer, I don't know, Office Smart. What's a computer? Well, how about Dell computer? Dell computer. You want to be more specific. Oops. When you hit tab, it'll ask us if you want to set it up. We have an option to choose fixed asset, and the only time you have this is when you're in an Items tab, and that's a fixed asset. You don't have that normally when you're creating a new item in the items list because fixed asset is a different list. You'll see that it carries the asset name in here, and this is going to be a new computer, and I'll just copy and paste that same description. The date is going to be on 12/15. I'm just kind of moving this over so I can see it. It's $758. And it's Office Mart. The asset account that I'm going to put this to is under computer and office equipment. We haven't, of course, we're not going to sell it yet because we're just buying it, but if you want to put any additional information down here at the bottom, that's a great idea. It's better, especially like in my office, we have a training center and we have a huge TV on the wall. It's an 80-inch TV, and it takes 2 people to take it down. Well, I didn't have the serial number because it was hung on the wall in the back. So had I done this correctly myself, I would have been able to easily find that. But I didn't follow my own advice. We'll click on OK and save that. So now we have really killed 2 birds with 1 stone. We have the expense going in, we have it registered under the fixed asset item list, and it's also reported in this office equipment. So if I go into this office equipment, I can see that entry in here. So now we have exactly what we need for the year-end taxes. Next, let's look at some long-term liabilities. We've gone into the loan manager, and we've set up the loan manager. Sometimes you don't need to have the loan manager to manage your loans. I certainly don't use a loan manager. There are issues in the past where if your computer dies, the files are stored locally, and when you move the file, you lose the documents anyways, or the transactions anyways. So I usually go in the longer way to create a liability and maybe an asset. We can create a new, let me see if that's in there, long term. Let's create a new vehicle. So we'll do a new vehicle loan. It's a long-term liability. Let's call this Ford loan. And let me just see what the account numbers